So you've been out possibly shopping for a home loan, and this 40-year interest only loan falls on your radar, and you're like, I want to be as educated as possible and explore all of my options and find out if I'm in the right loan product for my particular situation. So, with that being said, let's take a look at comparing the 40-year interest only and how it works mechanically and how it compares to a 30-year fix. And there are advantages for a lot of people and disadvantages for others. I think it comes down to, what's the right fit for you for right now. All right, let's pull up my slide. And am I going to put on my glasses? Okay. So the 40-year interest only is a loan that's available on non-QM loans only. It is not a feature of a traditional mortgage, backed by Fannie Mae or Freddie Mac. It's a non-QM product. As such, it has a certain feature where it is fixed for 10 years, and then it converts to the 30-year fixed rate at the same rate as when it started. So let me pull. Oh, you know what? I printed out a bigger paper so that I can kind of read off of it. Okay. So this loan was priced out recently, and it's not an offer to lend. It's just for informational and educational purposes only. On most non-QM loans, TDR Mortgage charges the points up front for the borrowers. We don't get paid on the back end of the loan or anything from the lender. So non-QM loans, by their nature, are a little more expensive than a traditional loan, but they're there to assist self-employed people who write too much off on their taxes and have to qualify through alternative means such as bank statements. So a bank statement loan, you'd provide 12 months of bank statements of where you deposit your income, and we look and evaluate that income and divide it by 12 and come up with an amount that you're going to qualify off of. I did two separate scenarios, one at 1.75 million price and one at 850 price. This was priced out using someone with a 760 FICO score, 20% down, owner occupied, and the payments are not escrowed, meaning they do not have taxes and insurance in the monthly payment. If you look at the top line, 30-year fixed, 5.8, the loan amount's 1.4, and the payment is $83.92 versus the 30-year fixed at $72.91. The first 10 years, the payment is going to be interest only and it's fixed. And then at year 11, it converts to the fully amortized loan. So the payment then goes to $86.20. So when you look at 5.8, right now you can get that 5.8 30-year fixed and the payment's $83.22, or you can choose to save $1,100 a month for the first 10 years. Now, a lot of people ask, well, gosh, I want to make sure that I'm, paying some down in the future. And what if I don't refinance? Well, you can make this an amortizing loan by paying more money monthly if you choose to. And we have some people that intend to do that. And the 40-year interest-only loan, it's an adjustable loan. So you could even, I don't know, let's say you're getting an inheritance down the road or something, you can opt to dump that inheritance money into the principal balance and lower the payment that way too. And if not, you have the confidence of knowing that, it's not something that is going to purely go adjustable at a later time. It's 10 years down the road. Now, a lot of people touch their mortgage in under 5 years, meaning they're refinancing it. And especially what we've come off of, since 2020 into about 3 or 4 months ago, we're in a very low rate environment. And so a lot of people were refinancing through the downturn in the interest rate cycle. With recession in the future, it's very common that rates will be I don't want to say adjusted downward, but when the feds come in to fix things, one of the first things that they do is they look at housing as a source of that fix. And typically when you go into a recession, the Fed's remedy is to lower the interest rates. When you look at the 30-year fixed at an $850,000 sales price, you can see the 30-year fixed is 4131 and the 40-year interest only is 3470. So that savings is $661 a month. And me personally, I'm more of a 30-year fixed gal, and I don't like to take risk. That's just me. However, depending on how your money is set up, depending on how your business is set up, depending on what your plans are for the property, this loan, does meet the needs of some people. So we just want to share it with you and let you know that it is something that's out there. It is a viable product. We are using this with the bank statement loans and also with the debt service loans for investment properties, where people are really looking to maximize the cash flow, knowing that rents are always increasing. I know a lot of people are speculating that rents are going to go down. I've not seen rental rates go down. I'm a landlord myself, and I don't believe there's ever been a time where I've said, oh, this year I'm going to lower my rent. So anyway, let me see. I want to introduce another slide in here. Let me see if I can here's a closing disclosure. And I feel like this is a good illustration to show that what the payment is during years 1 through 10, and then after years 1 through 10. This is a closing disclosure from a client that recently bought a home in the Silver Lake area, and she bought a $1.75 million home and opted for the 10-year interest-only product. We went, back and forth over all of her different options, and she was already putting a huge chunk of money down. So for her, it made sense, to opt for the 40-year interest only. And here's a copy of what the note looks like. So again, at the bottom third of the document, it shows what years, month 1 through 120, the payment is a certain amount. And then after that, it converts. So you have, me telling you this is how it works. Then you have a closing disclosure that further solidifies and explain how it works. And then on your mortgage note, which is your promise to repay the debt, it further explains how it works. All right. I feel like we got through that fairly quickly. Let me take another swig of water and see if I have any comments here. All right. So my name is Teresa Timms. I'm president of TDR Mortgage, and I serve the entire California market, specialize in SoCal. And if you need any assistance with buying, selling, or refinancing, pick up the phone and give us a call at 909-920-3500, and feel free to text. And please like or comment below so we get an idea of if this was helpful or not. And have a beautiful day.